I lost more money on paper personally on Friday than I've ever lost on any day of my life. I mean, it's not even close. It didn't even bother me that I lost all that money because a couple of weeks earlier, I didn't even have that money, right? Easy come, easy go. But as far as I'm concerned, I haven't lost anything because I'm just as confident as I was a week ago that prices are going much higher. Now, as I am recording this live, silver has actually bounced back, and it's now up $1.50. So it's back at around $86.50. And gold, which was almost down $200 earlier, I think I saw it down about 170, 180, is now down about 57. And in fact, 5 minutes ago, it was only down 20. So it's a very volatile session, but it follows an unprecedented collapse in gold and silver prices. Unprecedented in the dollar value that's wiped out on paper during the decline, and the magnitude in such a short period of time. When I got on the plane to fly down to El Salvador late Thursday morning, silver was above 120. It had traded above 121. In fact, silver made its all-time record high on Thursday. Same with gold. It was above 5,550. Can't remember the exact price. But when I landed, because I had no internet for the 3.5-hour flight, the jet didn't have any Starlink, so I was kind of blind. And so when I landed and I went on my phone, I saw what had happened to gold and silver on Thursday. There was about a 10-minute period where gold dropped like $300. I forget exactly how much, but it was a huge drop and an even bigger drop in silver. You know, silver has dropped 36%, just not this quickly. Same thing with gold, right? Gold has fallen by, 10, 15%, but just not in 2 days, right? This is really an unprecedented move down. But silver is right now over $86 an ounce. A couple of weeks ago, that would have been an all-time record high. So yes, we've had this spectacular decline, but all it did is bring silver back to where it was a couple of weeks ago, right? It erased this, major move up, but I don't think it's done any real damage to the bull market. It may have done some damage to some speculators who were highly leveraged and maybe got in recently and now got, stopped out and lost money. Same thing with gold. Gold is still close to 5,000. It's 4,800. Even though gold was down $500 on Friday, which was the last day of the month, I think January was still the best month ever, despite losing $500 an ounce. Right? This was not in the physical market. The people who sold all this gold and silver don't own any gold and silver. They sold what they do not own and what they cannot deliver. And there, I think, is going to be the problem, because this market is going to rise, and I think it's going to rise a lot faster than the shorts believe. The people who were buying gold and silver, the real buyers who were buying it at 90 or buying silver at 90 and 100 and 110, they're not going to stop buying because it's back down to 86. They're going to buy more. The real physical buyers who were buying gold at 5,500 are not going to stop buying it because it's 4,800. They're going to buy more. I mentioned before that the premiums are going to go up, and they've already gone up, but they're going to keep going up because this decline in price is going to fuel more demand in the real world for the physical metal. And the short sellers can't deliver physical metal, right? They can only sell it on paper. And so I think that the premiums are going to continue to increase even if the price of gold and silver decreases. So the sooner you can get your hands on physical product, the better, because it's possible that even if prices go down, gold and silver prices had been moving up by record amounts, and the dollar had just fallen to a 4-year low, the dollar index. And this dollar had fallen to an all-time record low against the Swiss franc. And the bond market was starting to roll over. I think that Scott Bessent and some other people close to the president talked to the president and said, we got a problem here, right? Maybe Jerome Powell thinks what's happening in gold is irrelevant, but it's not. It is very relevant. And I think there was a real danger of the gold price and the silver price continuing to rise, but have that spill over in a more damaging way in the foreign exchange market and in the bond market. So I think the Trump administration realized that they needed to do something to stop this, right? They had to figure out a way to kind of derail this train, slow it down, do anything, buy some time. And so what I think they did is they coordinated with some short sellers, whether it's big banks, about, going after silver on the Thursday. Because if you look at what happened, right, the huge drop in the price of gold and silver in just a few minutes is the result of a huge sell order hitting the futures market, like randomly, like at the market. Now, if you had a lot of silver or gold that you wanted to sell, would you just dump it on the market all at once? Or would you try to slowly get out without impacting the price or impacting it as little as possible so that you could get the highest possible price for the gold and silver that you're selling? That's what would make sense. But if you just dump a huge order on the market, knocking the price down, meaning that you end up selling your gold and silver at a much lower price than you might have got had you, been more quiet about gradually selling. It's clear that the real intent of the sale was not to get a good price on what you're selling, but to drive the price of what you're selling lower. But then what the government did is Donald Trump ended up on Friday morning, sooner than was anticipated, because it was supposed to happen next week or this week. He announced his pick, Kevin Warsh, to be the new Fed chair. Now, when that pick was announced, there seemed to be a coordinated, PR campaign around that pick, that it was a surprise pick, even though, he had been a front runner, all along. He wasn't the front runner, but he was, a pretty good bet, like 30%, 40%. I mean, he, from the beginning. So it's not like he's a major outlier. He's somebody that was out there as, one of the guys, one of the top 3 candidates for Fed chair. So it's not like this, is a complete shock, right? But they try to spin it as if nominating Kevin Warsh means that Trump has now done something that was unexpected. And that's because they're now positioning Warsh as this major inflation hawk who doesn't like quantitative easing and who, doesn't like low interest rates, saying he's one of the few FOMC members when he was there before, around 2008 timeframe, who was arguing for higher rates and was a critic of quantitative easing. And so all of their media reports, and I think the administration was behind this narrative, and Wall Street ran with it, that, this is going to be, Warsh is going to be a hawk, and, he's not going to be a Trump puppet. He's not, Trump's not going to, be pulling the strings, and that he's going to be more hawkish than Powell, that he's probably less likely to cut interest rates than Powell, and maybe even he's going to start advocating for rate hikes. And maybe he's going to want to go back to quantitative tightening. right? And so that helped fuel the sell-off in gold and silver. And I think whoever it was that started the selling on Thursday had the inside information that that was probably going to happen. And it was all part of the plan to first hit gold and silver on Thursday, and then, that like a 1-2 punch, get the technicals like a reversal of one day, and then come out with this supposed surprise game changer to say, hey, everything you were worried about, right? People were worried about a loss of Fed independence. They were worried about, a Fed that's going to be slashing rates and doing QE. And in one, swoop, they diffuse that bomb and say, oh, look, Trump did something completely unexpected. So all the people who were buying gold and silver because they expected easy money, right? Rate cuts, lots of money printing, inflation. You're all wrong, because look who Trump picked to be the Fed chairman. He picked Kevin Warsh, right? He's an ultra hawk. It's like, Paul Volcker, right? This is what is out there in the media. And I think it's all a bunch of BS. I don't think that Trump would have appointed Kevin Warsh if he thought that's what he was going to do. Trump has spent his entire presidency criticizing too late Powell. Why is Trump criticizing Powell? Because he thinks we should have bigger rate cuts than the ones that we've already had. He wants to get rid of Powell because he hasn't cut rates enough. And he told everybody that he wants to put somebody at the Fed who's going to cut rates. Now, the gold and silver market believed that, which is why gold and silver hit record highs. But now we're expected to believe that that's not the case, that Trump has had a change of heart, that he no longer wants a Fed chairman who is going to cut rates. He wants one who's going to raise rates. And, Powell is not raising rates, so let's get rid of him and put somebody in there who's going to hike interest rates. There is no way that that is the case. Now, maybe what they're trying to do is create the false impression that they've put a hard money inflation hawk at the Fed so that when he does cut rates, people will think, well, I guess, rate cuts are appropriate, because otherwise Warsh, this inflation hawk, right, wouldn't have cut rates, right? Maybe it's to provide cover, because I believe that Kevin Warsh has his marching orders and he is going to do exactly what Donald Trump wants him to do, because if that wasn't the case, he would not have been picked for the job. So forget about what they're portraying to the public about how he's independent and how he's a hawk. If that were the case, somebody else would have got the job. But it makes sense to me that they want to position himself that way, because it was clear in the precious metals market that the way he had previously positioned it was a problem. But these shorts, they're still there. They haven't covered. Obviously, if they'd covered, the prices would be a lot higher. But all the people who sold silver they don't have ultimately have to buy it back because they can't deliver it. So they got to buy back those contracts. And, we'll see what happens to prices when they do. Ultimately, I think the biggest losers are not the people who were long gold and got flushed out, but I think the people who are going to be trapped short gold and silver. Because I think a lot of these short sellers, they may be celebrating now, but I think it's premature victory dance. Because the real buyers, I think, and we'll see, the Chinese market hasn't even opened yet, but that's where the main buying has been coming from. And I've been observing that the entire time, right? You've got a lot of buying in Asia. You get selling when you come into the the European or the U.S. time zone. So the West has been selling and the East has been buying. But clearly, buying gold and silver have been the right thing to do, because look at where the prices are. Even after those big drops, and even if the selling continues for a bit, the prices aren't going to go anywhere near where this market started.